Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets. These are some of the key topics that we will be looking into in today's program.
Ukraine's steel output in the first 7 months of the year fell by 6.7% to 11.87 million tons, the Metallurgprom Steelmakers Union reported on Tuesday. Ukraine's steel output for all of 2019 fell by 1.3% to 20.82 million tons.
Moving on to the top news in the energy sector.
Poland reported on Tuesday a record daily increase in coronavirus cases for the fourth time in a week, with more than a third of them found in the southern Silesia region, which has been grappling with another outbreak among coal miners. Last week new cases were detected in 3 mines, including Kwarlowice, which was among those where work was cut back to a minimum in June. The State Assets Ministry said all 2,700 miners in Kwarlowice would be tested on Tuesday and Wednesday. Sanitary Services said last week the resurgence of COVID-19 among miners was a result of easing restrictions and of the working conditions in the mines, where it is difficult to enforce social distancing. Currently 1,043 coal miners are infected, mostly from Poland's biggest coal producer PGG, data cited by state-run news agency PAP showed on Tuesday. The pandemic has added to numerous problems faced by the coal industry. The government, PGG representatives and trade unions have agreed to work out a restructuring plan by the end of September.
We will now look at the top news in the agricultural sector.
Ukrainian Grain Traders Union UGR on Tuesday increased Ukraine's 2020 corn harvest forecast to 38.9 million tons, from 36.8 million tons. UGR also said that corn exports are likely to rise to 33 million tons in the 2020-21 season, from 30.3 million the previous season. The union's estimates for the 2020 wheat harvest and exports were left unchanged at 26.8 million tons and 18 million tons respectively.
Next we have agricultural price moves.
U.S. corn and soybean futures fell on Tuesday, with the market focused on expectations for bumper yields across the U.S. Midwest this fall, traders said. Wheat futures also were weak, with the most active Chicago Board of Trade soft red winter wheat contract falling 1.3% to its lowest since July 8, as a firm dollar further dimmed already bleak prospects for U.S. supplies on the export market. CBOT November soybean futures were down 7-1/2 cents at $8.88 -3/4 a bushel. CBOT September soft red winter wheat was down 6-3/4 cents at $5.14 -1/4 a bushel, with the most active contract hitting its lowest since July 8 on a continuous basis.
We will now take a look at energy price moves.
Oil prices eased on Tuesday on concerns that a fresh wave of COVID-19 infections will hamper a global demand recovery just as major producers ramp up output. U.S. West Texas Intermediate crude futures were down 67 cents, or 1.6%, at $40.34 a barrel at 10:20 GMT, while Brent crude dropped 71 cents, or 1.6%, to $43.44. The declines come after WTI rose 1.8% and Brent climbed 1.5% on Monday on better-than-expected data on manufacturing activity in Asia, Europe and the United States.
Moving on to metal price moves.
Iron ore futures extended gains on Tuesday on optimism about economic recovery prospects for top steel producer and consumer China and as investors questioned Brazilian miner Vale Saw's ability to increase output of the raw material. Iron ore's most traded September contract on China's Dalian Commodity Exchange closed the day session 3.3% higher at 890 yuan, $127.45 a ton, sustaining a strong start in August and underpinning gains in the spot markets. The Singapore Exchange's benchmark September contract was up 0.9% at $111.50 a ton in afternoon trade.
Finally, we have the most recent news on the financial market.
The US dollar was little changed against a basket of currencies on Tuesday, as recent gains driven by dollar bears taking profits ran out of steam and investors looked to Washington for direction as talks on the next round of coronavirus relief aid continued. After its worst month in a decade in July, the greenback started August on a firm note as some investors trimmed their short positions. The dollar index, which measures the currency against a basket of currencies, was about flat at 93.539. The euro, which gained 5% at the dollar's expense in July, was last down 0.04% at $1.1756. The Aussie dollar was up 0.31% after the Australian Central Bank held policy steady, as expected. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.